This is the stock market 1 to 3 month view. We're going to look at the SPY on the weekly, and then I'm going to show you the SIR live stream, which is for short-term traders, and our level 2, 3, and 4 members absolutely love this. So I'll give you a peek at that and show you what the live stream looks like today. So the first thing we're going to do is we're going to go into the stock market. So I had the FEZ up here. In the beginning of the show, I was talking about this and how it was indicating to us that the stock market was going to have a large decline, and it did, and how it aligns with the stock market here in the U.S. And here is our analysis here for the stock market. Just a reminder to you that we do cycle analysis. We are one of the few teams, analytical teams in the world that brings this type of analysis, and this is our version of it. On the bottom are cycle brackets, which help us understand money flow. They're made up of multiple time frames, and we also look at shorter term time frames or longer term time frames. We look at monthly, weekly, and daily for cycle analysis. We were looking for the stock market to have a large correction right in here, which would likely bottom either sometime in March or sometime in April. And I'll show you in a second those two scenarios. These are the minor cycles, as you can see right in here. And when this cycle bottomed and then failed and got below that cycle low, that set up the large decline that we saw, 4.4% in the S&P 500 and about 23% in the NASDAQ and in the Russell. Let's take a little closer look here as we look at the scenarios for the next 1 to 3 months. And I want to remind you, if you want to learn cycle analysis, go to askSlim.com workshops, to the workshops in the top navigation, and we have a free video on there and tons of information on that cycle analysis workshop. We're going to be offering a special on that sometime starting in early April. So we want to kind of cue you up to take a look at what that is and get ready for the special that we're going to offer. So right now we could see what we had in here was essentially this cycle right in here had bottomed and then rallied and now started to move down again. So I kind of have that kind of squished right over there, but you can get an idea of how the cycles shape up. With those lines in the middle are off the daily. So right now we're in this rally right over here, which is this rally right here. That was expected. Now the question is, which scenario are we in right now? The decline was 14.4%. The rally is right on time in here, and it's very strong, blasting off here close to 6% on the upside right now as the market gets that strong rebound. The question is, will the next sell-off take out this low and even get down to this major 38.2%, which would be a 20% bear market? Well, with the other indexes having been down that far already, it is certainly a possibility. We just don't know for sure how that is going to set up. Let's look right over here a little bit deeper, as you see right there. And one of these two scenarios is what we see. Either this was the important low right over here, and then we get into this period of upside rebound. It could be a test of the high. Most bear markets get up between the 61.8% and to about the 78.6%. That would be 453 to 465 in coming weeks if that was the low. If this was not the low, and it does come down one more time into this April period, which is what the daily pattern is suggesting can happen, then we would expect that it probably wouldn't quite get up as high as that, because that decline would be pretty severe. But everything we look at really points to the fact that this period in May and June is a rebounding period. Right now, between March, end of March, and into April, May, it's probably a lot of two-sided action, where you come up, you fail somewhere in this resistance area, you come back down, either you take out these lows or you don't, and then you begin to move up again. So we see a wide chop in here. Even if these lows don't get taken out, you're probably between 415 and 465. That's 500 S&P points in that range, with still the possibility of this decline out into April. We think that this decline out into April, if it takes out the low or it doesn't, is the timing to be looking for some pretty good long side setups in there for this period in here. So while we were extremely negative right in here, we're looking at this time frame in here as bottoming right in here, and then the potential for some better period out over here. This is the period that some people call of denial, really, because the market's breaking and they start to go up again, and they think that, okay, all clear, we're going back up to new highs like you've seen for 13 years. That probability is very low. The longer term patterns are just not in good shape. And that points out to this period way out over here into the fall time for some pretty negative action. And I've been talking about a bear market coming down to about at least 30% or more, and I still think that is the highest probability out later in the year. In the meantime, we're getting into a period where the bottom pickers are going to get paid, and things in some areas do look cheap because lots of stocks got hit very hard. So that's the 1 to 3 month view, really coming potential for a little more rally, coming down again, and then rallying again up into these resistance areas, and a rebound that really I think is a big hook. And that it's really the area where investors who have not sold yet really will have probably the last opportunity before another huge move to the downside. I think that is the highest probability. So now what I want to do is I want to look at, because we have a lot of short-term traders that come into this section, and I want to talk about a way to really improve your trading as far as the shorter term. I want to show you our stock index report. And I'm going to show you this whole week really quickly of what it was and show you the live one that's going on right now. This is kind of a day trading review that we're looking at for the SIR live stream. SIR live stream is available to our level 2, 3, and 4 members. This is Monday. We're going back to Monday the 14th. And you can get an idea. The market was really weak on Monday the 14th. This is the reversal scout right over here, which keeps you on the right direction of the market. We put in support and resistances, and the yellow areas are what's called acceleration zones. Once they get into the yellow area, the price, not the reversal scout, but the price, the odds are better than 80% that it's going to move all the way through it, as you see right over here. This, as you could see, there was a little hump right over there as the rally failed and turned down again. And this kept you bearish the whole time. As a matter of fact, the Russell looked weaker than any of them. And I want you to see as we move forward. So that was Monday the 14th. This is Tuesday the 15th. Remember, the market started to reverse on Tuesday. The reversal scout put you in as it turned up right over here, moved through the acceleration zones and through resistances here on the upside, and these are actually the acceleration zones from the previous day, which it was getting through. And you can see that that reversal scout really helped you be on the long side when that began to move to the upside. Great information. Lots of times you get information for pair trading also. I'll show you that in a moment. Look what happened here on Wednesday the 16th. Market was still strong. As it turned over right in here, the market got weak. This was a fooler as it had this amazingly strong close because this was FOMC day. So you really don't know what it's going to do at the end of the day. And this was a huge move, like over 100 points in the S&P 500, which this did not help you see. Early in the day you saw it turn back down here, which was nice. But this big upward movement, there's no way that we could have spotted that. And this was a news day. So normally we would expect that it would be a little crazy late in the day after the Fed. On Thursday, look at this. You know, the reversal scout put you in and said long side as it really began to move up all day, move through these acceleration zones, kept you on the long side the whole way, just beautiful as you can see that. And all three indexes very strong. Looking at that. So that's Monday through Thursday, a great look at what you see as far as what happened the whole day on all of those days, and basically kept you on the right side of the market and told you to stay in just beautifully through the whole week. This now, of course, is today. And remember that what we're looking at is the S&P 500 on a 15-minute chart, the NASDAQ on a 15-minute chart, and the Russell on a 15-minute chart. You can see in here that it has kept you on the long side. The market has been strong. The NASDAQ moved into this resistance area and is kind of stalling, but got through the whole acceleration zone here, about 80% of it here, and then failed. Here you could see through them all, it hit resistance and now is kind of stalling, but didn't turn over. And here is a key right over here. The Russell is weaker. So in this case, if you were a pair trader, you would buy the strongest, which is NASDAQ. You would short the weakest, which is the Russell, at the appropriate amount of sizing so that you're at some neutrality probably, and you'd be able to trade that pair trade. And it's very clear. And you see through the acceleration zones, long side, through the acceleration zone and curling over and telling you about the weakness in the Russell, and the S&P 500 still strong. So this is live right now, running live, and you can get this live by being a level 2, 3, or 4 member, and it will really help your trading in the indexes if you're a short-term index trader. We do it on the cash indexes. It doesn't matter. It still, extrapolates over to the indexes on the futures, and you'll be able to use all of this information. So this is live and trading right now, and you don't need any kind of a special platform at all. You can get our SIR live stream just by becoming a level 2, 3, or 4 member. If you want to come in at level 2, you can write to Matt at askSlim.com. He'll send you a special pricing so that you can come in for 3 months and really try it out. Even as a level 3 or 4, I'm sure he has something for you at special pricing. This is the amazing live stream, which really, really helps guide you. We have a ton of members that use this, and it's one of our strongest levels of membership, and also one of the most solid levels. In other words, the people that come in really seem to stay because they benefit from it. There's huge content in there. You'll get 600 videos from us also, and everything we have in level 2 and level 1. Check it out. And do become a level 2, 3, or 4 member to get the SIR live stream. You really get an example of how good that is.
Hello, fellow traders and technical analysts. This is Matt with askSlim. Now is the best time to check out what's happening at askSlim. We are in the midst of our once-a-year premium services preview, where we hold an open house and offer free access to some of our most popular premium services. Just go to askSlim.com and click on the Sign Up Now button on the top right of the home page. No credit card is required. The askSlim PSP features an opportunity to access world-class, unbiased technical analysis, cutting-edge trade planning tools. You can connect and learn from a dedicated analyst team, all trained by Slim. You receive professional-grade trader education inspired by Slim's 6 decades of trading experience as a floor trader and screen trader. Our methodology supports most trading styles, including intraday, short-term, and multi-week swing trading. Let's take a quick look at some of the impressive services you will have an opportunity to utilize during this time. The askSlim SIR Intraday Grid Live Daily Chart Stream. This is broadcasted on a daily basis from market open to market close. It is designed for intraday traders and delivers key insights into primary intraday momentum, key support and resistance zones, and high probability acceleration zones for the S&P 500, the NASDAQ 100, and the Russell 2000. Next, we'll take a look at the askSlim S&P 500 multi-time frame chart stream. This is where you can learn how to apply our suite of custom indicators at multiple time frames to assist with determining directional bias, catching changes in directional bias, monitoring for extreme conditions, following momentum divergences, and identifying favorable trade setup conditions. We have a glossary and usability guides that are included, which go into deep detail around our custom indicator studies and also suggested guidelines and best practices for this service. Next, we'll look at our askSlim trade ideas. Trade ideas are specifically designed to support your trade planning. We believe trade planning should be a critical part of a trader's process. For this reason, each trade idea is accompanied by our custom weekly and daily charts and includes a template including many of the most essential components of a trade plan. Each trade idea will highlight favorable entry ranges, target zones, and suggested price levels where the idea would likely need to be reevaluated. And finally, I wanted to highlight our new askSlim cycle timing service, which is now in beta. We're really excited about launching this new service. Our askSlim methodology is a unique technical style that blends cycle analysis, momentum analysis, and swing high, swing low techniques. Because of this analysis, we are able to offer projections not only in time and price, but also in direction. Being able to project in time is a core aspect of our cycle analysis and the askSlim methodology. Finding and timing the next key low is, as everyone knows, no easy task. With the askSlim cycle low timing service, we increase those odds greatly. There are often opportunities surrounding the bottoming of cycles as well as the nesting of cycles at different time frames. Our new cycle low timing service is an essential tool in the askSlim arsenal and is designed to help our members identify and manage the risks and opportunities associated with lows that happen. That's all I have for today. Make sure to go to askSlim.com and sign up for our once a year premium services open house preview. I'm going to bring over the home page right here. You can click on this green button to sign up, learn more about all the various services that are available. And once you feel like you're ready to go, just click on the sign up now button, and that'll take you to the form that you fill out. There is no credit card required. That's all I have for today again, and I wish everyone all the best and great trading.